Carrington, good morning. So the Fed is continuing its pretty aggressive campaign to curb inflation, isn't it?
Yeah, that's exactly right. This is the second 0.75 of a percentage point rise from the Federal Reserve in just the space of 2 months, 6 weeks to be exact. And the Federal Reserve is saying that they need to take pretty drastic measures in order to curb the worst inflation that we've seen in the United States 40 years. We just got the current numbers in Australia running at 20-year highs. Here in the United States, inflation is the highest it's been since the early 1980s, and this is across the board. It's hitting people every time they go to the grocery store, or every time they pay their rent, or if they move house and have to pay more in rent, or when they go and fill up their car. And this was what was expected, another 0.75 of a percentage point rise to follow the one that we saw last month. But the Federal Reserve is indicating that they may be able to at least to lower the pace of rate rises that we're currently seeing. The Federal Reserve is in a difficult position. It has a dual mandate. It wants to keep inflation stable and low, but it also wants to keep the economy ticking over so that people have the possibility of getting a job. But the Federal Reserve Chair today, Jerome Powell, says really the focus at this point needs to be on making sure that price rises come down.
Colleagues and I are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all.
We saw a positive response on the share market today to this 0.75 of a percentage point rise because it was in line with what markets were expecting, and it seemed to be pretty much unanimous among the board members that this was the right level. The concern was that they might go a full percentage point and there might be further full percentage points on the near horizon. Instead, this seems to be a slight improvement in the outlook for the US economy and how quickly rate rises need to happen. And so that's why we saw this positive news. But the question, of course, will be what does the next inflation number tell us and whether or not those price pressures are starting to abate.
Carrington Clark outside Federal Reserve headquarters in Washington. Thank you.